I do want everyone to take time to read over the risk disclaimer. That is for your protection as well as mine. Okay? Okay, we're going to go ahead and get started. Please remember, I want you to read over the risk disclaimer. Basically, it's for your protection as well as mine. And you should never trade with money you cannot afford to lose. Now, I'm presuming everyone can see my screen and can hear me. Please let me know if I am wrong. There is a chat option. And if you look within your Blizz box, you'll see two speech bubbles. If you click on that, it expands the chat option. Okay, we're going to go ahead and get started this morning because we are going to trade the Canadian retail sales report. Now, the Canadian retail sales moves about 48 pips, okay? And that would be measured from high to low. So this is a volatility-based trade. Now, if you have a bias, for example, you think the USDCAD is going to go up, or you have a bias to the downside, then of course you would only do it in the direction of your bias, meaning you would either go long or you would go short. I like to do the volatility-based trades because I already know anything can happen during a market report. Now, in this case, you see I've already done two, okay? One is a long position and one is a short position. Now, the reason that I did that, and this is my long and this is my short, okay? The long I actually did using a spread because I did not like the risk on the binaries. The short, on the other hand, I did using a binary for an 11 a.m. expiration, okay? I was only risking about $27 per contract, okay? I do have profit targets on both of these trades. If I go over to working orders, you can see on my spread, I have a target price at $27.50. And on the binary, I have a profit target of 20. Okay. Now, I'm going to go and look at some of them that just opened. Okay. And see if there are any additional trades I want to do for the 8 a.m. to 10 a.m. Unfortunately, on the USCAD, you do not have a 9 a.m. expiration. So in this case, price is currently trading at $26.96, and this would be the at the money price. Okay, I'm looking for something around 19 bucks. So we can get this one at $26.74 for just about 80. Sorry, 20. I'm telling you the actual price. Sometimes you have to continue to click and amend your order. So now we have this one, and it's the 10 a.m., and we have about $20 of risk on that. So I want to go ahead and go in and set a target, and I'm going to set it at 15. And I want to look to see if there's one that I want to do on the long side. In this case, I wish I could get that a little bit cheaper. And these strike widths on the Canadian are 10 pips, okay? So that's going to make a difference as well. This would give me $45 of risk. I'm going to go ahead and venture to the 27.24, okay? Because I really want to keep my risk under that $40 parameter. I prefer to get it even cheaper, but that's not the case. So I'm going to go into the long position, and I'm going to set a 85 profit target. Remember, when you're long, you go up. When you're down, you go under what your premium was, okay? Does everybody understand so far? So basically, we have both longs and shorts on this particular market report. Now, it could go either way. It could not move. Now, if it doesn't move, then you're going to lose on all of these, okay? But again, you're trading volatility. It's a market report. You're expecting it to move off of that market report. Now, the other thing, I know I've had a lot of questions about the strike width on the Forex pairs. And if you go to Nadex Markets and then go to contract specifications, it will identify exactly what the strike width is. In other words, for the 2-hour binaries, the strike width is 10 pips, 20 pips on the daily, okay? If you're using weeklies, it's 50 pips. And they have these on all of the markets, okay? So to me, it's very important that you know the strike width, because you can determine exactly how far out you need to be. And this long at 27.24 is further out than what I would have wanted. I would have wanted 20 pips, but I'm not willing to risk what they want on that particular binary, okay? Again, if you're doing this, it is very important that you actually lower your risk as much as possible. Now, we could also go and look at the spreads, okay? If we go and look at the spreads, and we could do the 7 a.m. to 9 a.m., you can see I already have one there that is a long position. You could actually also look at doing a short position. Again, this would be $9 of risk. You've got $9 on your long position, okay? You could mix and match these as well. Does everybody understand that? The one thing that you need to pay attention to when you are doing the spreads is the indicative price versus what the offer is, okay? So in this case, it has to move 10 pips just to recoup what you're paying on entry. Do y'all understand that? And a lot of times on these, I will actually wait until about 10 minutes, 5 to 10 minutes right before the market report. But I'm constantly looking at them to say, okay, maybe I can lower my risk by entering a little bit early. Does everybody understand that? Now, how do you know which reports to trade? If you go to forexfactory.com, and let me move this out of the way for a moment. If you go to filter, and I don't look at the New Zealand or the China currency, I only look for red reports. So in this case, you can see there was a British pound report, there was a euro. This one I typically do not trade, but then you have the core retail sales and you have crude oil inventories. One comment about crude, if you like to take crude, this report is coming out at 11 o'clock, okay? To me, that's not one that's very conducive to me trading volatility. And the reason is I like to get it where the report is encompassed in that binary. For example, we're doing the 8:30 market report on the Canadian. I prefer that expire at 9 a.m., okay? Because then I've got time decay and volatility work in my direction on the binaries. Do y'all understand that? Because you're going in with only about 40 minutes left, okay? The crude oil inventory, you're going to have 60 minutes, okay? Because the only one you could potentially trade on that one for a 2-hour basis would be the noon. It would expire at noon. You couldn't choose the one that expired at 11 a.m. You wouldn't have enough time for that to move. The difference is the binary is going to have time decay kicking into it in addition to the volatility, which gets you your profit target. In the case of crude today, this is one of the days where it's not going to come out at 10:30, so I don't like to trade this particular crude oil inventory report. Does everybody understand that, or did I just confuse you? I want both time decay and volatility working in my favor. Now, you'll see it this morning primarily on the one that I did for a daily expiration, which is why I did it. This is 11 a.m., okay? And this one is really going to, it's not going to work as fast in our favor because there's no time decay on that one, okay? You can see I entered that at almost 7:30, okay? So this one, we're not going to have time decay in our favor. But again, the USDCAD, the 2-hour binaries actually begin at 8 o'clock. Yes, it is Wepper. I'm going to send out the links for the webinars from now on. I like this program better because I can do mentorships as well as webinars. Yes, I prefer 30 to 40 minutes before expiration, Charles. Yeah, you kind of get more bang for your buck, okay? Yeah, you're not getting time decay in your favor. They'll be more expensive. Usually at the, if you're trading a 2-hour binary, the closer it is to expiration, the more time decay you have in your favor, okay? And again, you could lose on all of these. If the market does not move, you do have that potential, okay? Now, the other thing is if you've never traded a market report, do not be surprised when the profit or loss in all of these columns, they just go blank. If you get a high volatile market report, they all go blank. Okay? It's just the way it works. Any other questions this morning before the market report comes out? Another thing you don't really, well, I don't, okay, I want to change that. I don't try to manage the risk, okay? And the reason is because I was comfortable with the risk going into the trade, okay? If you're not comfortable with the risk going into the trade, don't take it. And that is very important for you to realize. I have seen times where, for example, okay, this could actually go up. It could fill my profit target here and then come straight back down. Okay. I have seen that happen. In that case, you may actually get filled on both. Okay. Then again, this may go up, not hit your target, and then come down, but hit your other target. Because sometimes it's quite hard to get out of these. Okay. I've seen that happen as well. Now, another thing that you can do, let's just say that we want to go short on this 9 a.m. Okay. So I'm going to go short on this one. It's got $8 of risk. Okay. And then I'll come to the 10 a.m. and actually go long. Okay. Does everybody understand that one? Oh, there we go. Now, on the 9 a.m., that actually is, I believe that one is the long one. Let me check. Yep, it's actually the short. So in this case, okay, the price that I entered was at 82. Does everybody understand that? So I need to come in under that, but above the 25.90 area. So in this case, I'm going to set a target at 26.20. Okay. That would be a $42 profit, no, $62 profit. If you subtract 82, subtract 20 from 82, that gives you 62. Okay. So I'm just going to place that order, and then on the 10 a.m., the entry price was 09. And I'm going to set that one at 70. Okay. There's nothing magical about setting these targets. All you want to do is see that on the long one, you have a target at 70. Okay. And you entered at 27.09. So if you subtract, there's your profit. Okay. It's just different ways where you can build the binaries as you're trading. Now, you may wonder, well, why can't you just wait until after the market report? Because after the market report comes out, the volatility is extremely high and it's very hard to get in that market. Any other questions before the market report comes out? Can you go over that spread profit target again on the short spread? Sure. That would be this one. Okay. So what we have, our entry price was 26.82. That's where we entered. Okay. Now remember, we're short, so we need to go down in price, okay, to take a profit target. So in this case, what did I set that target at? 26.20, Charles? If I click over, I'll lose my writing. But let's just say it's at 26.20, okay? All right, if we subtract this out, that gives us a 62 pip move, okay? Each pip is worth $1, okay? So that gives us a total profit of $62. Now, this is really easy for Forex, okay, because every pip is worth $1. When you go over to the indices, it's a little bit different. It's a tick is worth $1, okay? Or a point is worth $1. You really have to get into the specifics there. And it depends, like the ES, we're used to the ES has 4 ticks, but with NADEX, it moves in 0.1. And each tick is worth $1, okay? You also need to remember when you're setting this target, okay? When you're setting this target, because we are short, we have to look at the floor, okay? You want to be above the floor. And you need to be above the floor usually by 10 to 20 pips to even get filled, because they do what I call like locking it up where it won't go lower, okay? So, don't set this as your target because it won't get filled more than likely. But if you'll go, maybe 20 pips above that, 30 pips above that, you have a greater chance of being filled. Okay? Now, if you notice on this chart, this is the 60-minute ATR, this is the 30-minute ATR right up above me, and it just tested that blue ATR, okay? We do have volume divergence, so this is saying the bias is probably to the downside if we get a reversal bar here. Of course, that's not going to plot or finish until it's time for the market report. And I am somewhat biased, to the downside, but it could do anything. Okay? It's a market report. And it's very important to actually realize that. And also, a lot of people say, well, what if the market report comes out this way? What if the market report comes out that way? I don't really care. I don't look at the news. I don't have the news playing. I could care less. Because most of the news is just old news, okay? I feel like when I'm looking at the market news, it kind of gives me a bias that I don't want to have. The one other thing is I like to make sure that we have, targets on all of the binaries, especially. So I just double check the binaries. Sometimes I do not set targets on the spreads, but the binaries I always set targets on. And in this case, I'm going to bring these down because if I need to get out of one really quickly, I need to use the working order, not create a new order. If you create a new order, then you still have one order sitting there and it may get filled and it might not be a good thing for your account. Okay? Just to let you know. I've done that before, so I know from experience. You might not like it. Okay, we're just going to wait until the market report comes out and we'll see what happens. Also, I just wanted to mention in this case, I've combined binaries with spreads. You could actually also do this just with spreads or just with binaries. To me, it's always dependent on the risk. You just have to remember the market report will do whatever the market report wants to do. Okay, as you can see, the report came out and is moving up. I believe some of our targets already got filled. That was quick. And this is usually the way it is when you're trading a market report. It actually gets filled really quick. We have one remaining order, which is to the long side. Has not been filled yet. We could go in and exit now, or we could just let it move, okay? Does everybody see how important it is to have those targets in there? Now, this is another question. No, you couldn't exit if you didn't have those targets in there, Charles. Okay. And this is another issue when you're trying to figure out, okay, did I make money or not? Because I mean, they were filled really, really quickly. The easiest way is to go to my account, go to history, transactions, and I do, like the last 6 hours, okay? And I download the history, okay? And the reason that I download it is because I bring it into Excel. And that way, at a glance, I can tell whether I got profit or not. In this case, this is opened in Excel, okay? You can see that all of the trades are from today, okay? You can see the actual strikes and everything else. And we do still have one pending that's not going to be included as far as profit in here. But I'm going to click in this empty cell and I'm just going to say auto sum. And as you can see, regardless of where the last one finishes, we've made $38. Okay. And if you add that with, let's say that we exited this right now, it would be 28. Okay. And so if I auto sum these two, then you get 66. It's $1 on the exchange fee. So basically, we've made $65. Okay. If I exited that one with a $28 profit. Do y'all understand how I did that? And I mean, really, that wasn't a lot of work. It wasn't a lot of analysis required. It's just saying, okay, I'm going to limit my risk, okay, but I'm going to give myself enough for profit, okay? That's all we did. We knew it would more than likely move, okay? That's it. That was our trade. We knew it would move. Any questions on it? And I mean, we get advance notice that the market's going to move because we know when the volatility reports are. So it's not like it's a secret. We know when this is going to move. And I actually set my schedule according to these market reports. Any questions on this at all? I mean, that's it. We're finished. Okay. And I mean, this is an easy way for new traders to actually say, hey, I might not be the greatest at technical analysis, but I can do basic math. So I'm going to limit my risk and try to make money. Again, if you're trading a report, and sometimes, especially during summertime, the reports will not move. Okay? But as long as it moves, as long as you're reasonable with your expectation, then you can pretty much make money. I really suggest that people start out with, one contract on each of these and build up from there. If you can trade one contract profitably, then the chances are you can add and trade two contracts or three contracts or four contracts. Then you're just compounding what your profits would be. Okay? All right, guys, that's all for today. That's the only thing I wanted to show y'all how to trade. Again, it's not complicated. You just have to use your math skills. Okay? All right, everyone, have a wonderful day. Thank you for joining me today. I hope everyone enjoyed it. And next week, I'll be out of town all week. I'm actually going to New York. But I will be back the following week. We do have some really great market reports coming out in March. Okay, so we'll be doing more of these real short webinars just to show you, okay, let's trade this, because it's very quick, it's very easy. Okay? All right. Well, thank you, Charles. Everybody have a wonderful day, and I'll see you when I get back from New York.